Brenda Butner. This is Bulls and Bears. And we're going to have more on that huge Microsoft Yahoo deal. Did you hear about that? In a few minutes. But first, Super Tuesday, 24 states, 2,000 plus delegates. A big day for the candidates indeed. But how could it be an even bigger day for your stocks? Let's find out in the trading pit. And here they are, the Bulls and Bears this week. Gary B. Smith, Toby Smith, Scott Blyer, along with Peter Schiff, author of Crash Proof and president of Euro Pacific Capital. And look who's back. Bob Olstein, president of the Olstein Funds. Pat Dorsey returns next week, we promise. All right, Gary B., let's get right to it. Super Tuesday, a super day for the market?
Absolutely. A huge day. Look, I think we know it's going to, at this point, you know, it's obviously going to be Hillary or Obama. In my opinion, they're interchangeable. They're both socialists. They'll both ruin the country. So we can kind of disregard that. But the thing that we'll have a more clarification on if it's going to be McCain or Romney. And now it looks like there's a groundswell for McCain. I think both would be great. I think McCain will be a great leader. And I think if we find out that it really, truly looks like it's going to be McCain, I think that's going to be great for the market because I think he's going to be terrific for the U.S., terrific for the economy.
All right. Thank you for that democratic response, Gary P. Peter, sometimes, though, uncertainty is better than certainty for Wall Street if it doesn't like the outcome. Do you think Wall Street will like this one?
Well, I think that's the problem. There is some certainty here. We're pretty certain that one of these guys is going to get the nomination on both sides, and I don't think any of them are going to be good for the market. I don't think the Republicans, unless for some reason we manage to nominate Ron Paul, I don't think any of these Republicans has a chance of winning against either of the Democrats because we're going to be in a very severe recession by the time the election comes around. And unfortunately, the mainstream candidates have embraced the Bush agenda and the Bush economy, and I think they're going to get blamed for the recession, and I think they're going to, have to deal with it at the polls.
So you're a bear on stocks and a bear on candidates, all of them. Okay. Bob, do you think that the Super Tuesday showdown will mean good things for stocks?
To me, it's getting fairly obvious it's going to be President McCain. We don't see a big recession. There may be a technical recession. The stars are aligned correctly for the market. You got the Fed. You don't bet against the Fed. They've never been right when you did bet against the Fed. You have price-earnings ratios and the quality of down to 15.
Means the prices of stocks and price tags are cheap.
They're down to 15. There's tremendous corporate liquidity out there. There's investor liquidity out there. It's yesterday's stories, all these write-ups. There will be more, but it's in the prices of the stocks.
Well, Toby, chances are that the race is going to be a lot clearer next Tuesday. Is that a good thing for Wall Street?
Well, whether it's Hillary or Obama, they're going to be out saying with all their money that the economy's in a deep recession, the country's way off course, and that's not good for the sort of the popular psyche, if you will. On the flip side, McCain, I love him to death. An economist he is not, is the first one to tell you that. And he is in an economic fight. I'm a little bit worried about him going against, let's say, Hillary, because Hillary has got a better rhetoric. She's sort of got a sharper deal here, and right now she sounds more like Peter Schiff than John McCain sounds like somebody who's a big bull. That being said, I think that Super Tuesday is going to be nothing yet. We're going to have another 2 or 3 months. When it becomes clear, for instance, if Obama looked like he was leading, that would be bad for the market.
Toby,
I agree with that.
Being an economist is not necessarily a quality we want in a president, okay? Okay, Scott, Wall Street hoping for a clear outcome?
Wall Street doesn't care yet. It's got plenty on its plate to worry about. I mean, we've just dropped 2,500 points from the top. We've discounted the eventual Democratic winner, if there is one, because, look, if one of them wins, taxes are going up, and it's going to be a much less friendly business environment. We know that. The market knows that, but the market doesn't care about this now until after the summer. Then, maybe once we're through all of some of these issues, maybe there will be some caring about it. But right now, market's got plenty on its plate to worry about.
Okay, Gary B., answer that one.
Well, I agree with Scott. There is plenty to think about.
You agree with me? That's scary.
But there's always that but. Every piece of incremental information obviously affects the market. This piece of information we're going to have Tuesday is huge. It will be even huger if Ron Paul is even mentioned by anyone, Peter, I'm sorry to say. But I don't think that's going to happen. And I think if people start to perceive that McCain really has a great shot, not only winning a Republican nomination, but also defeating either Hillary or Obama, I think that will be very good for the market.
But Romney is the best guy for the market because he is the
I don't
business
think so.
guy.
I think McCain, look, McCain is starting to get the support of supply-siders like Jack Kemp. He has already admitted that being against the Bush tax cuts was a mistake. I think he's coming around, Scott.
But Toby, the question here is, no matter who it turns out to be, and it does look at this point by the polls, you know, that it's going to be, that it's pretty clear, but things change at the last minute. At least Wall Street will have something to look at. It's no longer a big question mark.
Well, I mean, you were just answering one part of the small part of the question, which was who's going to run against each other. Wall Street cares about who's going to be the next president, and is the next president going to have the House and the Congress and have a agenda to throw away the Bush tax cuts, have an agenda to raise taxes against corporations, have an agenda to tax the rich. That's what we are going to be fearful of about. And if we get into the fall, for instance, and you have a Hillary going, and she's running, you know, McCain is sort of the Hillary killer. Everybody feels that mano a mano, pardon the pun there, that McCain could probably be the one who would take Hillary down. If it looked like she was really, remember, we're getting polls that she was up, you know, 15 or 20 points. Market's not going to like it.
You know what, Toby? Cheer up. You're in Arizona. You're going to the Super Bowl. Thanks for the invitation, by the way. All right.
Yeah.
That does it for the Trading Pit this week. But the fighting doesn't end here. Get your game day gear on. The annual Bulls and Bears Stock Super Bowl. The guys have winning stocks and the winning team. Check it out. We've never, I sound like Peter Schiff here, been wrong about picking the champ. Not once. And now, are you ready? Our Stock Super Bowl. The guys each choose a stock from the team's hometowns, not only predicting the game winner, but guaranteeing a money-making touchdown for you. All right, Gary B., your team and your stock.
Well, the Patriots, I think, are going to win easily in this one. But more importantly is the stock. It's the Boston Beer Company, commonly known as Sam or Sam Adams. My gosh, they probably have about 20 different kinds of beers now. But what I like best is this chart. You can see it's been putting in a bottom since late 07. And what we don't even show on that chart is Friday's action there, which, you know, they drew a kind of a downtrend line across that last recent set of highs there. It really broke out nicely on Friday. I think this could be 50 to 60% higher by next year's Super Bowl.
All right, that's the charts. Let's go to the fundamentals. Who else to ask but Toby?
You know, Gary, I believe, has been sampling a fair amount of this product just to come up with this pick. They, you know, their margins are going down. The business, they got Budweiser and everybody else is coming after them. They may get bought out, but $50 for $50, the Giants would have to win by 30 points, and that ain't going to happen either.
All right, Bob, are you a bull or bear on this Boston beer?
Well, the only thing Boston beer is going to be used for is Giselle Bundchen's going to cry in a beer when Tom Brady's girlfriend when the Patriots.
I'd buy that beer then.
At 20 times earnings, it's overpriced.
She doesn't like being paid in dollars. That's right. All right, Peter, your stock and your pick.
Well, when it comes to sports, you know, I go with my heart, and stocks I go with my head. So I'm going with the Giants. But since I'm using my head, I'm going to pick this Gold Vector ETF from Van Eck. You know, I think the Federal Reserve is in the process of turning the dollar into monopoly money, and I think you want to own gold stocks, and at least if you buy this ETF, you get a pretty good basket of them.
Gary B., you like it?
I don't. I think this made its high. I think the gold bug train is about to be derailed. Had a lousy day on Friday. I think this is going to go the opposite way of the market.
Okay,
Look at the chart.
Toby, do you like it?
Listen, you know what? I do think you want to own some gold in your portfolio here. You know, Peter's never been wrong. So, you know, if this thing's right, it's going to be up another 10, 15%.
All right, Toby, back in November, you said the Patriots would finish undefeated. Now they're one game away. What is your team? Still that, and what's your stock?
Of course it's going to be the Patriots. Brady's going to have a winning drive in the last 2 minutes. The win by 7 will be 32-26. Now, American Superconductor up there is a perfect Boston stock here. This is a company that has two sides. They have the wind energy business that's growing like crazy, but they are in the business of taking electrical utilities and creating a new system for putting electricity out much more efficient. It's mandated by the federal government. I think this will be a $50 stock when they win again next year.
Bob, you like it?
1.3 billion market cap, 100 million in sales. Tobin, take off to California. Don't even go to the game.
Scott, it was up like
You like it or not?
it was up like
What's not to like,
175%
Bob?
last year. You like it?
I like the stock. I think it's got a very bright future, a lot of superconducting magnets in their future, so I really like it.
All right, now you like the favorites or the underdog?
I'm an underdog guy, and I'm a Jersey boy, so I'm going for the Giants, needless to say. And I'm not going to overthink this. I like Verizon. It's got a 4.5% yield. It's down from the high 40s to the high 30s. When everybody hated it, it was $35. Now Verizon and Fios is eating cable TV's lunch. It's dependable, it's predictable, it's recession-proof.
All right, Peter, you hate it, right?
Sure. Look, I don't.
You don't like any stocks. Okay. All right, Gary B., what about you?
I like it. I think Scott makes a good argument that just kind of coincides with its stock has really picked up its long-term uptrend line. I think this is a good pick.
All right, Bob, your team and your pick.
The New York Giants. I am from New York, although now I live in Connecticut, and my stock is Morgan Stanley. Morgan Stanley is now selling at 6 times earnings, 1.4 book value, international presence. It's too cheap. Everybody's piling on these brokers.
And they're advising now on the big deal about Microsoft and Yahoo,
Yes,
I
they
think.
are.
All right, Scott, what do you think?
I'm a bear on it. In the wonderful world of finance, pick regional banks with money to lend, not brokerage houses.
And Peter, you love it.
No. Well, first of all, you're saying it's at 6 times earnings. Again, the earnings are likely fantasies. They're going to turn into losses. This sector is not finished going down. Avoid the financials like the plague.
We deal in fantasies here. You got to learn that.
Yeah.
All right. Thanks, guys. Later on, legendary investor. There he is. Bob Olstein returns with his best picks in the shaky market, and you'll only get them here on Bulls and Bears. They're coming up right after this. A huge deal this week that could mean huge gains are on the way for your stocks. We're talking about Microsoft, of course, offering almost $45 billion to buy Yahoo. Gary B., great sign for the market?
Absolutely. You know, when companies like Microsoft go hunting with big bucks, and it's really not big bucks to Microsoft, but it's big bucks to Yahoo, that certainly means they see good times ahead, or at least bargains at this point. I'll tell you what, I don't think this is the last buyout, merger, whatever, takeover that you're going to see, and I think it does bode well for the rest of the year for the market.
Try to find something negative about this, Peter.
Well,
Come on.
It's not hard. It's pretty easy. Look, I think Microsoft really is feeling a little desperate. They're threatened by Google. I think they want to, I think they're buying the stock to take on Google. I think it's going to be bad for the shareholders of all 3 companies in the short run.
What about for the market? It's a sign that the
No,
companies
it's
are
not
spending.
a sign of anything. We're in a bear market. I mean, it's not. Don't start grasping for straws or looking for silver linings. The market's going down, particularly if you price it in gold or foreign currencies. But I think this is particularly bad. If you happen to own Yahoo, you got to get out of jail free card, sell the stock. But I wouldn't. I would be selling my Google here if you still own it.
Right.
And I would sell Microsoft. I think maybe the customers are going to benefit. I think
you need to
from
go
this,
out
but
to
not the
Arizona
companies.
with Toby. Now, come on.
He didn't invite
give
me.
me a little bit.
Google is
Cheer
threatened
me
by
up.
Microsoft.
No, Microsoft is threatened by Google.
Oh, really? Microsoft has 100% of their earnings away from the internet.
So why are they
I don't know
buying
how you
Yahoo?
can even say that, because this is a win-win for both people. And by the way, it is a lot of money to Microsoft. They only have
Well, it's all
$20
stock, probably.
billion on the balance sheet. They should pay all cash. This is a win-win for both people. Microsoft is going to be a competitor. They can cut costs, and Gary B. has been so on, I'm putting him up for vice president.
and actually, you own Microsoft, right?
Yes, we do. We own a load of it.
Okay, and you think this is a positive
And
market.
by
You're
the
a
way,
bull.
it's not only that. This is the first indicator that deals aren't dead. There's going to be strategic deals that are going to start accelerating in the second half of the year. There's a lot of liquidity out there. You can take your gold and buy your wife jewelry, and that's all it's going to be worth.
Well, Gary B., it's interesting because, the fear in a recession is the consumers won't spend and companies won't be spend. This is quite a little purchase here.
Yeah, exactly, Brenda. And, I get back to my earlier point. I don't think this is the last of it. The other thing is, you got a lot of money, buying, lending, borrowing to do these deals. Not that Microsoft, they're going to take it from their petty cash drawer. But I'll tell you what, that's been freed up by the Fed. I don't think we've ever seen, Peter, a depression, which is basically what you're saying, with inflation this low, with unemployment
Inflation's not
this
low.
low, with
Stop believing in government numbers.
personal income higher than inflation with the Fed having interest rates this low. It's just not going to happen, my friend.
Gary, inflation is high. You're getting your information from the government.
Because the government has lied. That old argument, right?
No, it's not an old argument. In the 1990s, it's a fact. They changed the way they calculate the CPI specifically.
It's 2%.
No, it's not. It's more like 10%.
Okay.
Go to the grocery
I guess
store,
if
go
we
to
use
the
your
gas
numbers
station.
then, Peter, right?
No.
And I guess the unemployment numbers then wrong also, right?
Well, they probably are. I think there's a lot more unemployment than 5%. Look, I think
I just saw a black helicopter outside. Hello.
Look, oil's not at $90 a barrel. Gold's not at $900 an ounce by accident. There's a lot of inflation.
We know where you guys stand. Thanks very much, though. Good debate. And Peter, thanks for being with us.
Thanks for having me.
Good sport. All right. Coming up, 3 stock picks from one of Wall Street's best. Sorry, Tobin, it's not you. Although you're right up there. Bob Osteen's exclusive picks only on Bulls and Bears. It's time for Bob Osteen's Best Buys right now. Okay, Bob, you've gone deep sea fishing in some turbulent water, so what's your first catch?
As you know, we like controversy. I think the cheapest large stock on the board is Citibank. They've loaded.
Citigroup.
It's Citigroup. Mr. Pandit has moved in there with the intelligentsia. He's raised $20 billion to solidify the bank. We believe the earnings power of this company in 2009 is $4 to $4.50 a share. We think there's too much bearishness on it. We're riding with the experts from Singapore and Abu Dhabi.
You are controversial. Scott, do you like it?
I don't like it, and I'll tell you why. This company should be the primary beneficiary of lowered interest rate environment. The problem is they have problems that are unique to this company, and it's not going to help them.
Gary B., you're bull or bear on this?
Love it. I think this is going to be a huge stock for Bob this year.
Well, there's your VP right there.
I'm thinking of bumping out
VP of Olstein Financial Alert, I would hope.
All right, what else you reeling in? Number 2, Motorola, right?
Motorola, another company that is in deep trouble, and that's why we like it. Here's a company that's worth $10 or $11 a share with its other divisions, the telephone division. Here's a company that has $20 billion in sales. They're going to probably put this division up for sale. It's worth anywhere from $4 to $8 a share. We think the stock is worth anywhere on the low side from 15 to 20 bucks.
Quite a mover lately. Up 10% on Friday.
Realized in the next 6 months.
Toby, what do you think?
I think he has become great friends with Carl Icahn. And when Carl Icahn came in, when he and Osteen go together on a stock, maybe they can help this thing. But unless they do that spin-out, Bob, they are still in the toy. That's a technical term.
Okay, all right. And your final one.
Collective Brands. Here's a mid-sized company, Stride Right Shoe and Payless Stores. Excellent brands, $1.75 a share in free cash flow next year. We think the stock's worth $25 a share.
Payless, I love them. All right, Gary B., do you like it?
I do. This is another one I think put in a bottom. Another one's going to have a banner year.
Scott, quickly.
Plus, footwear is recession-proof, so it's a great pick.
Well, you can go barefoot. I mean, I bet Peter Schiff thinks we should, right? All right, Toby, quickly, you like it?
I love Bob, but I think the ticker symbol on this stock, instead of PSS, should be POS. It's going to take another $5 down, and then you got an Osteen stock.
All right. You know what?
He's early, yeah.
I'll tell you a real Best Buy.
See if you come to the beach this year.
It's coming up next. Well, he invited you to the Super Bowl. Cavuto on Business, the best buy there is around.